Here are the crypto top headlines covered in this video. Glassnode co-founders say opportunities opening up for altcoins predict strong alt season if this happens. Next, BlackRock's ETF chief says 75% of its Bitcoin buyers are crypto fans new to Wall Street. Also, Tether's USDT hits record $120 billion market cap, flashing Uptober signal. Welcome to Crypto Top Headlines, where there are no speeches on my opinions, just bringing crypto's news to you. I would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, Glassnode co-founders say opportunities opening up for altcoins predict strong alt season if this happens. The founders of analytics firm Glassnode say that altcoins may have one last dip before they start to outperform Bitcoin. Jan Happel and Jan Alleman, who go by the handle Nigentropic, tell their 63,400 followers on the social media platform X that despite a possible near-term correction, many altcoins may soon start performing well. Altcoin opportunities on the horizon. Our Bitcoin altcoin cycle indicator shows we're back in a BTC dominant regime, below 50 on the chart. As Bitcoin pulls back and altcoins drop sharply, this opens up entry opportunities. If BTC breaks through resistance and the indicator moves above 50, we could see a strong alt season ahead. The Bitcoin altcoin cycle indicator measures whether traders favor altcoins over Bitcoin. Values of over 50 indicate that Bitcoin is underperforming altcoins and that the market may be entering an altcoin season. Bitcoin is trading for $68,708 at the time of writing, up nearly 2% in the last 24 hours. Next up, the analysts look at the recent market performance of Layer 1 projects. They say Solana, Ethereum, and BNB, the Binance Exchange's utility coin, may continue to lead the pack while Cardano and Polkadot may continue to fade. Old guard Layer 1s, who's leading the charge. Sol has taken ETH's spot in leading bull runs, but in this one is sharing the spotlight with ETH and BNB. ADA and DOT are lagging, a shadow of their past glory. Expect this trend to continue as stronger projects gain market cap. Solana is trading for $154 at time of writing, up 1.5% in the last 24 hours. Meanwhile, Ethereum is trading for $2,649, up 1% on the day, and BNB is trading for $600, up 1.3% in the last 24 hours. ADA is trading for 34 cents at time of writing, up slightly in the last 24 hours, and DOT is trading for $4.24, up by a fraction on the day. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, BlackRock's ETF chief says 75% of its Bitcoin buyers are crypto fans new to Wall Street. A year ago, Samara Cohen believed there was so much pent-up demand for Bitcoin that she and her team at BlackRock launched one of the first ever spot Bitcoin exchange traded products in the US. Now investors are flocking in, and a lot of them are crypto enthusiasts who are new to Wall Street. Cohen, who heads up the asset manager's exchange traded funds and index investments as chief investment officer, told CNBC that BlackRock now sees the demand was for a better way to access Bitcoin. It was for the ETF wrapper, she told CNBC on stage at the Permissionless Conference in Utah. The total market cap of all 11 spot Bitcoin ETFs now tops $63 billion, with total flows of nearly $20 billion. In the last 5 trading days alone, spot Bitcoin ETFs have seen net inflows of more than $2.1 billion, with BlackRock accounting for half of those sales. The spike in trading volume comes as Bitcoin hit its highest level since July this week, trading above $68,300. Bitcoin ended the third quarter up around 140% from the same quarter a year ago, outpacing the S&P 500 as these spot token funds and the crypto market cap move higher in lockstep. Crypto-aligned stock Coinbase closed up about 24% this week, its best week since February. Cohen told CNBC that part of the strategy for attracting customers to its funds was teaching crypto investors about the benefits of exchange-traded products, or ETPs. 13F filings, which offer quarterly reads on equity positions taken by large investors, show that 80% of the buyers of these new spot Bitcoin products in the U.S. are direct investors. Of the 80% of direct investors, Cohen told CNBC that 75% had never before owned an iShare, one of the best-known and largest ETF providers on the planet. So we went into this journey with the expectation that we needed to educate ETF investors on crypto and on Bitcoin specifically, said Cohen. As it turns out, we have done a lot of education of crypto investors on the benefits of the ETP wrapper. Before the U.S. Securities and Exchange Commission greenlit spot Bitcoin funds in January, investors had a few ways to buy and custody cryptocurrencies. A centralized exchange like Coinbase was among the most user-friendly options for U.S. investors, but the blockbuster debut of Bitcoin ETPs has laid bare to Cohen and others across Wall Street that crypto exchanges weren't giving digital asset investors everything they needed. It helps that the U.S. is a huge market for digital assets. New data from Chainalysis shows that North America remains the biggest crypto market globally, accounting for nearly 23% of all crypto trading volume. The blockchain analytics platform estimates that between July 2023 and July 2024, there was $1.3 trillion in on-chain value received. Venture firm A16Z found in its recently released State of Crypto report that more than 40 million Americans hold crypto. So far, adoption has mostly been through wealth management clients asking advisors to add new spot crypto products to their portfolio. In August, Morgan Stanley was the first big bank to allow its 15,000 financial advisors to pitch Bitcoin ETFs from BlackRock and Fidelity to clients with a net worth of over $1.5 million. Other firms are still performing in-house due diligence before allowing their armies of FAs to start actively pitching the funds. Wealth manager allocators have not been allocating, Van Eck CEO Jan Van Eck told CNBC in Utah. I mean, they're barely even warming up. Van Eck drew parallels to the European market, where the company has 12 token-based products trading in Europe. It's exactly what we see in Europe, he said. Very few private banks have really approved investment in Bitcoin or Ethereum or anything else in a major way. Van Eck said his company has about $2 billion in its European crypto ETPs and that a lot of the volume is from individual investors. Wall Street needs rules from lawmakers on Capitol Hill before it gets more comfortable with crypto. ETFs create transparency. Cohen thinks that in a lot of ways, ETFs and blockchain technology are solving for similar things. ETFs have been a decentralizing force in TradFi markets that have brought a lot more access and transparency, and importantly, really accelerated in growth during the post-crisis 2008-2009 period, said Cohen, referring to traditional financial markets. I find it incredibly meaningful to look at the fact that the Bitcoin white paper was published on October 31st, 2008, and then you have the G20 leaders from around the world meeting to discuss the aftermath of the financial crisis and how do you create more transparency through public reporting, Cohen continued. BlackRock took on less risk by using counterparty clearing and multilateral trading. In TradFi markets, those moves create huge tailwinds for ETFs. Then at the same time, DeFi is becoming a reality over the intervening 15 years, she said. Was this a win for Bitcoin? Was this a win for ETPs? To me, the answer is, it's a win for investors. To the extent we can effectively marry these ecosystems which are solving for the same goals. Our next top headline, Tether's USDT hits record $120 billion market cap flashing Uptober signal. The $120 billion USDT market cap could spill into Bitcoin and Ether, ending their 7-month downtrend and saving the Uptober narrative. Tether's United States dollar-denominated stablecoin has surpassed the record $120 billion market capitalization for the first time, signaling a potential crypto rally. Tether's USDT, the world's largest stablecoin, surpassed the $120 billion mark on October 20th, according to the firm's website, which offers live updates of the stablecoin supply. Stablecoins are the main on-ramp between the world of fiat currencies and digital assets. A growing stablecoin supply is often used as a signal to predict an upcoming bull rally, as it suggests that investors are loading up on stablecoins before investing in cryptocurrencies. The growing USDT supply could help catalyze the next Bitcoin rally. In August, Tether minted $1.3 billion of USDT in 5 days after the Bitcoin price bottomed at a 5-month low of above $49,500 on August 5th. By August 9th, the $1.3 billion of USDT helped Bitcoin stage an over 21% recovery to trade at $60,271 from the August 5th market bottom. Can $120 billion USDT catalyze the Uptober Bitcoin rally? Tether's growing stablecoin supply could catalyze the next Uptober rally, crypto slang for October, because the month is historically bullish for the Bitcoin price. Looking at Tether's treasury flows, a significant portion is being sent to some of the largest centralized exchanges, or CEXs, signaling incoming buying pressure from investors. Arkham Intelligence data shows that during the past 24 hours, Tether's treasury sent over $66 million worth of stablecoins to Binance and over $20 million worth of USDT to the Kraken exchange. Conversely, a lack of stablecoin inflows often leads to a crypto market correction. On August 12th, Bitcoin price fell below the $60,000 psychological mark, staging a near 4% correction as institutions temporarily stopped buying USDT. Can Bitcoin stage a breakout before the end of October? Based on historical chart patterns, some analysts expected a 3-month Bitcoin rally to $92,000 after September's downtrend. October is historically the second best month for Bitcoin price, with average returns of 21%, second to November, which averages over 46% monthly returns for Bitcoin, according to CoinGlass data. During the previous Bitcoin halving year in 2020, the price rose over 27% in October and over 42% in November in a 6-month rally that lasted until March 2021. To confirm a potential breakout from its current crab walk, Bitcoin needs to close the week above $68,700, according to popular crypto analyst Rekt Capital. Growing Bitcoin exchange-traded fund inflows could contribute to Bitcoin's potential breakout. Bitcoin ETFs surpassed the record $20 billion milestone in total net flows on October 17th, just 10 months after launching. In contrast, it took gold-based ETFs nearly 5 years to cross this same $20 billion milestone. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.